Every American worker's paycheck changed on January 1st, 2026. And the shifts are bigger than usual, way bigger. Two things happened at once. The IRS made its routine inflation adjustments to over 60 tax provisions. And then the One Big Beautiful Bill Act was signed into law on July 4th, 2025. Together, they deliver the most significant tax overhaul since the Tax Cuts and Jobs Act of 2017. Roughly 85% of U.S. households will pay less this year. Average tax cut? About $2,900 per household. Let's break down the 5 specific changes hitting your paycheck right now. Change number 1. Standard deductions went up. This is the single most consequential number for roughly 90% of taxpayers who don't itemize. Single filers jumped from $15,750 to $16,100. Married filing jointly? From $31,500 to $32,200. Head of household goes to $24,150. About a 2.2% bump across the board. What does that actually save you? A single filer earning $60,000 saves about $51 a year. That's roughly $1 a week. A couple earning $100,000? About $103 a year, $2 a week. But there's a big bonus for seniors. Taxpayers 65 and older get a brand new $6,000 deduction on top of everything else, $12,000 for couples filing jointly. This phases out above $75,000 for singles and $150,000 for joint filers. But the result? 88% of Social Security recipients will pay 0 federal income tax on their benefits. Change number 2. All 7 tax bracket thresholds shifted upward. The OBBBA permanently locked in the TCJA rates 10, 12, 22, 24, 32, 35, and 37%. Without this law, rates would have reverted to the old system. For single filers, the 10% bracket now covers up to $12,400. The 12% bracket stretches to $50,400. The 22% bracket goes all the way to $105,700. Every threshold got wider. Here's a design detail worth noting. The bottom 2 brackets got a 4% inflation adjustment. Higher brackets only got 2.3%. That's an intentional tilt favoring lower and middle income earners. Change number 3. Retirement contribution limits jumped across the board. The 401k deferral crossed $24,500 for the first time ever. Here's the full breakdown. 401k goes to $24,500. IRA contributions jump to $7,500. Catch-up for ages 50 plus is now $8,000. And the super catch-up for ages 60 to 63 stays at $11,250. A 61-year-old can now sock away $35,750 in employee deferrals alone. With employer contributions included, the max total annual addition hits $83,250. That's serious tax-sheltered money. New rule for high earners, though. If your FICA wages topped $150,000 last year, catch-up contributions must go into a Roth account, after tax only, no exceptions. Change number 4. HSA and FSA limits climbed. HSA self-only contribution goes to $4,400. Family coverage to $8,750. Plus, bronze and catastrophic health plans now qualify for HSA eligibility. But the real headline here? Dependent Care FSA jumped 50%, from $5,000 to $7,500. This is the first increase since 1986. 40 years of stagnation, wiped out in one legislative stroke. A family in the 22% bracket sheltering the full $7,500 saves roughly $1,650 in federal income tax, plus avoids 7.65% in FICA taxes on that amount. Real money for working parents. Change number 5, child tax credit, EITC, and other credits shifted. The OBBBA made the child tax credit permanent at $2,200 per child. now indexed for inflation going forward. Without the new law, that credit would have crashed to just $1,000 per child, with lower phase-out thresholds too. That would have crushed tens of millions of families. The earned income tax credit also rose. For a family with 3 or more kids, the max is now $8,231. 2 kids gets you $7,316. 1 child? $4,427. Even childless workers get $664. Beyond the 5 changes, the One Big Beautiful Bill Act reshaped the entire tax landscape. It quadrupled the SALT cap from $10,000 to $40,400. Huge for homeowners in high-tax states like New York and California. 4 brand new deductions arrived, all temporary through 2028. No tax on tips up to $25,000. No tax on overtime up to $12,500. A car loan interest deduction up to $10,000. And the senior bonus deduction of $6,000. The estate tax exemption surged to $15 million per individual, $30 million per married couple, made permanent and inflation indexed. Without the law, it would have been slashed to about $7 million. So who actually benefits most from all of this? The Tax Policy Center found that about 84% of households get a tax cut in 2026. But the benefits are heavily concentrated at the top. The richest 1% of Americans capture $121 billion in net tax cuts. The entire bottom 60%? Just $79 billion. The top fifth gets 70% of all benefits. The bottom fifth gets less than 1%. Middle-income families with children do better, though. A middle-income family with kids pays about $3,000 less in 2026, mostly thanks to the expanded child tax credit. But here's the uncomfortable truth. The CBO found that when you factor in spending cuts to Medicaid, SNAP, and other safety net programs, lower-income households actually lose resources overall. Tax cuts giveth, spending cuts taketh away. The Tax Foundation estimates these changes increase after-tax income by 4% in 2026, but they'll reduce federal revenue by roughly $5.2 trillion over the next decade. That bill comes due eventually.